Going global now, U.S. consumer inflation is expected to rise again in April as the ongoing Iran conflict continues to push up global oil and food prices. Investors are now watching closely for fresh inflation data that could shape the Federal Reserve's next move on interest rates amid growing concerns that higher living costs may further pressure the American economy. And Britain's financial market, they're under pressure as government borrowing costs surge to levels not seen in nearly 3 decades amid growing political uncertainty surrounding Prime Minister Keir Starmer's. Investors are reacting to reports of mounting calls within the Labour Party for Starmer to step down, sending gilt yields higher and the pound lower, and fears growing over UK's fiscal outlook and political stability. OpenAI and Microsoft are reportedly reshaping one of the biggest partnerships in artificial intelligence. This is according to reports that the two companies have agreed to cap revenue-sharing payment at $38 billion as OpenAI pushes for greater financial flexibility ahead of a possible public offering. Well, the move could also open the door for OpenAI to deepen partnership with rivals, including Amazon and Google, signaling a major shift in the rapidly evolving AI race. And from there, we head to Germany, where Siemens Energy is ramping up shareholder returns after a sharp jump in second quarter cash flow. And that's fueled by booming demand that's linked to artificial intelligence and data center expansion. The energy technology giant says that it will accelerate its share buyback program to as much as €3 billion next year, after reporting a 42% surge in pre-tax free cash flow. The company has also raised its full-year outlook, signaling growing confidence in the global energy transition and AI-driven infrastructure. Brazil's state-owned oil giant Petrobras has reported a 7% drop in first quarter profits, missing market expectations as higher global oil prices from Iran conflict fail to fully feed into earnings. The company says that its pricing model delayed the impact of the recent surge in crude prices, while weaker domestic fuel sales also weighed on performance. Despite the earnings dip, Petrobras is still moving ahead with a multi-billion-dollar shareholder payout, and investors watch closely for stronger second quarter results. And German hydro energy technology firm, they are calling Nucera. They are tightening costs after reporting a wider than expected second quarter loss, as rising expenses tied to green hydrogen projects continue to weigh on earnings. The company says it will freeze hiring in high-cost countries and restructure parts of its operations after posting a €64 million net loss and double analyst expectations. Despite the setback, the company says that cash flow improved as investors closely watch the future of Europe's clean energy and hydrogen ambitions.